Aloha, everyone. Friday was a day of carnage, absolute carnage in the stock market following through on Thursday's sell off. This is coming as no surprise to anyone. We've had many of our long term leading stocks hit final sell stop levels or important 50% sell stop levels. Most of our recent new long positions haven't been working out the best, and basically all of them failed today. So what we saw today was completely expected. Unfortunately, the past 2 days, this sell-off has come sharp and heavy. We've managed to obviously put hedges on SRTY, the Russell 2000, on the biotech index with the BIS, and the technology stocks with the TECS. But unfortunately, 2 days ago, tried to get short the Dow Jones Industrial Average. It gapped down, preventing this inverse ETF from getting filled in one account. And in 2 days, we've missed out on a 10% gain in that name. And then unfortunately, yet today, TVIX just gapped up way too much in the morning after already being up 16%. Seemed it would be very foolish chasing it up 20% overall from the day before whenever it opened in the morning. However, that would have been a prudent trade as TVIX finished up 33% on the day. But that's actually not that great considering that the VIX overall was up 46%. And one of the biggest two-day moves that I think that I personally have seen like in a long time. I'm not sure if I've ever seen the VIX move in 2 days like that. I know that I've seen it in 5 weeks or 5 days move like that, but I don't know, man. That was pretty impressive. 2 days, 83% in the VIX. That's a lot of fear, but I don't think that it's capitulatory yet because, as you can see here, nowhere near extreme overbought readings on either one of these oscillators on the VIX. Nowhere near extreme overbought readings on any of these oscillators. So, technically there's still room to run, and that's whenever we're going to go back to the NASDAQ. If we look at these oscillators, you can see these extreme lows even in 2014 and all the way back here in 2012. We're nowhere near those extreme lows. So for anybody who thinks that we're definitely oversold and can't go any lower, I beg to differ. That is not what my oscillators say, just on a basic quick glance. Are they headed in the right direction towards extreme oversold? Absolutely. But until you see it get towards these levels based on the sell-off that we're currently having and then start to see it turn up a little bit, you can be sure that we're not anywhere out of the woods yet, especially with the huge volume. I don't care if it was options expiration or not. This is a big, big, big downtrend, and a lot of leading stocks are just starting to crack. I still have some that are uptrending still too, like SKX and TREE. I'm still tracking right around 30 stocks overall, and that means that there's still 30 stocks that are a good long they're in good long uptrends that I can still be long because A, they're still in uptrends, or B, they're above important support levels. So like ICUI, I got rid of half of that today, but you can still see still above the 50-day moving average, just like I showed you with Tree. There's many others, but most of them ended up looking like MNST and MANH breakdowns below the 50-day moving average on heavy volume. And as you can see, if this is just the start for these stocks, then obviously you can see that there could clearly be more downside left in the overall market. The S&P 500 also same similar situation, rolling over a cliff as we said. Huge volume, oscillators nowhere near extreme oversold levels. Look at stochastics. So there's plenty of possible oversold selling to come overall in the market. Dow Jones Transportation Average, same similar situation. Dow Jones Industrial Average, same similar situation. Russell 2000, getting there, but nowhere near there yet. But everything's in the right direction on that index. But even if you want to get to the oversold levels in 2011, check that out. Nowhere near where we need to be. And let's look at where we are compared to them on the NASDAQ. We have a long way to go if you really want to get down to those levels. And here's a weekly chart. These oscillators are good because, it just shows you how much potential downside could be left going on a weekly one with this one, the Russell 2000, compared to the 2011 lows to where you get extremely oversold on a weekly. So until we get to those levels and start to curve up, or we start to curve up at all on these oscillators, I do not recommend trying to be a hero and buy these bargains. Don't forget that we're still in August. This is actually, I just learned, the actual worst month for the stock market since 1987. It's the second worst month since 1929, and it's the third worst month, or the second worst month since 1950, first worst since 1987-9, third worst overall going back to 1929. And what's the number one worst month? since 1950 and 1929. September coming around the corner, and September's number 2 since 1987. So overall, we have another nasty month ahead of us. I just wouldn't be looking to buy bargains anytime soon, especially when stocks like Netflix are just now starting to crack. Apple's starting to really roll over on strong volume. The big caps like Microsoft are just cracking. Google now finally rolling over. Priceline finally now failing those earnings gap up in earlier breakouts. So technically, even if we don't bottom, let's say that we do bottom here, even if we do bottom here, it's going to take weeks, if not months now, to repair the damage and to set up the chart symmetrically to be buyable again. These kind of breakdowns and this kind of volume is very rare to see. We haven't actually seen it in a long time. Wow. We haven't seen it in forever, actually, in like some of these healthcare stocks. So the fact that we're seeing these kind of moves now, it's going to take a while to fix. I really doubt that we're going to see the kind of move bounce back up that we saw in October with the market. It's always possible. We're in the right direction. It'll be interesting to see what the investors' intelligence bull-bear ratio reads by the end of next week. So it's just extremely interesting out there. We were on the right side of the market, but I tell you what, I can't tell you how depressing it is to watch DXD do what it's done in the past 2 days whenever we finally nailed it. There's our pocket pivot point signal right there. Just gapped up too much. 91.76 was my limit. Got down to 21.76, I mean, was my limit. Got down to 21.90. Nothing I can do. Didn't feel like splitting it up. Half market, half limit. Clearly, in hindsight, should have. Same with TVIX. With the high of 695, already up about 20%. Seeing a gap up. It's near 760 in the morning. Could have put half the order still at the limit at 695. Could have done half at market, get long around 760. But no, figured it was gapping up too much. Didn't want to risk it. Cost me. So big moves the past 2 days in those indexes missed. But SRTY, TECS, and BIS, definitely mitigates the damage. Some good gains in those. Tech S, I'm not sure how much. Where did I even get long this one at? Is it back here? Feels like it was back here. So got a good 20% gain in that. Whoops. The SRTY off the lows. We got a 22% gain in that. And BIS off this position right here, we have a 17% gain. I know it's not as good as the TVIX, but we're in the right track. If we continue to sell off, at least we're hedged there. And we've got out basically out of all of those long-term long positions, we got out with gains on all of our 100% sells. The stocks that I still have left, I still got significant gains on. Once again, this weekend, raising stops. I had a ton of sell stops, by the way, hit Thursday, Friday. Commissions were huge this week, but the potential losses could have been thousands upon thousands of dollars by it just costing me like, I don't know, I feel like I spent like $65 in commissions this week at Interactive Brokers, which in each account, which is just insane. But it paid off as it saved me a lot of money on the downside. But the way this market looks, it doesn't look like I don't know, it's unfortunate the sell-off just happened a little too fast to get as short as I wanted to be. We could have been almost 100% short if that TVIX and DXD would have filled. But as of now, it looks like we're still about 45% short overall in the accounts. And I say our cash position with that has got to be right around 50%. And then our long positions got to be around 25%. It's crazy that we still have, but let's just go ahead and show before we get out of here. These are all the stocks that I still am watching on. So they're all Amazon still above the 50, Skechers still above the 50, Tile is hanging on by a thread, AYI still above the 50, and these are all longer-term winners. So until they're below the 50, the chances are they're not going to be full sells. You can use ABMD, FIX, AMSG, HCKT. So despite this horrible swoon fest the past 2 days in the market, you can see that we still have some long positions. SERV, this right here is the final sell stop level right there on this one. ANAC still above the 50-day moving average. ICUI, DERM, even though I've been knocked out of all of it. AVOL still trending above it. EPAM holding these lows. This will be my final cut loss level on this one on an end-of-day basis. But as you can see here, you know, these stocks are still trending higher, so that's why we're still long. I'm not going to panic out of them just in case we do get a bounce. But overall, very disappointing that I missed TVIX. Very disappointing I missed DXD. But shoulda, woulda, coulda. The bottom line is we're leaving with gains in most of our long-term winners and only small losses on the recent longs, and our hedges are working.